Hello, beautiful people, and welcome to my channel. It is the Jalissa Joy, and I thought I would come to you all a little bit more professional today because you know why? It's tax season. But it's also Black History Month. So what I have done, myself, a few of my friends, we have tax questions that I'm sure many of you also have and sent them to my personal tax man. Yes, the man that does my taxes and has known me since I was a little girl. I'm gonna let him introduce himself, but please watch for all of the questions. There are about 11 questions and some useful information at the end or advice for Mr. Kent Hill. Stay tuned, it's gonna be a great show.
Hello, I want to say hello to everybody. First of all, I want to thank dear friend Jalissa for inviting me to kind of speak to you. Just a little bit about myself. My name is Ken Hill. I met Jalissa a long time ago. Dear family friend, her and her mom. Been working with them tax-wise for a long time as well. Graduated from the Citadel Military School in South Carolina. I'm currently in Columbia. Started as a staff accountant. Anywhere from cost accounting, financial planning analysis, plant controller, and now I'm a financial analyst manager, dedicated more on the commercial side for a company here in Columbia, South Carolina. Finance background, love numbers, and that's how I kind of got into taxes. Long time ago, just started doing taxes for a few friends, brother, and all of a sudden I had taxes coming out of everywhere. So I was like, you know what, maybe it's time I can have my little side business. And once I started doing it for people to make it legit, what I did was went on to register with the IRS. So I have my preparer tax identification number and my enrolled agent number. Once you kind of do more than 4 or 5 taxes for people, and also if you're getting any money from it, the IRS wants you to kind of be registered with them, and so you don't have any legal issues, things like that. This is February, and everybody knows what time that is. It's tax time. First of all, you did the right thing. Even though you couldn't pay, you filed your taxes, which is a good thing. You will be penalized if you don't call them and set up some type of payments. Now, because of COVID, they have been very lenient as far as how they're allowing people to, maybe if they originally would give you 120 days to pay off a balance, they might give you 180 now. But the key is you have to call, because if you don't call, if you just send it in without payment, yes, you're going to get penalized, interest on it and everything. But because of COVID, if you be patient, call them, because every time you call, this time of year is going to take you a long time to get through. But be patient, stay on the phone, talk to them, and because of COVID, they would definitely make special payment plans and extend terms and not charge you some of the interest that normally would be charged at this time of year. No. And as far as tax credits for moving, they have eliminated pretty much all of tax credits anyway for moving, unless you are military. If you had to move in the military and you have a duty station that's at least 50 miles from your original duty station and you're there at least 39 weeks, you will have a tax credit for that. But as far as just to move, no, especially not for COVID. But even with that, there's not any moving expense deductions anyway, even prior to COVID. There's no tax benefit of just buying a home. You don't get a tax credit for just, I'm gonna buy a home, so automatically I get a tax credit for buying that home, unless you have any prepaid mortgage interest or points that you're gonna have. Now, once you purchase that home, every year on your taxes, you can, if you itemize, you are able to write off your mortgage interest, insurance premiums, your property tax bill, and things of that nature related to the house. Not necessarily saying I'm going to get a credit because I bought the house, but once you purchase the house, you do get yearly credits if you itemize all of those things I just mentioned with the mortgage, insurance, property taxes, and things of that nature. In general, the majority of the time, it is better to file jointly. You get more tax breaks that way. For example, you file jointly, you're able to take the earned income credit or the child tax credit, education credit. Neither one of those things you can take if you file separately versus married jointly. There's some tax benefits to filing separately. One of them, if one spouse makes a whole lot more or one is a lot less than the other, sometimes that's a benefit, sometimes that's not. You have to do it both ways to figure out which one the best way to do it. The other way is, for example, if one has a whole bunch of medical bills, maybe it's best to file separately. You can take that credit because medical bills, you only can deduct up to 7.5% of your adjusted gross income. Filing jointly, that adjusted gross income is a lot more than one income. For example, if you don't make much, but you have a whole lot of bills, your adjusted gross income is going to be a lot less, and chances are you'll be able to deduct all of those expenses above 7.5%. Whereas jointly, that 7.5% of adjusted gross income is going to be a lot higher, and you probably won't be able to take advantage of that deduction. So in general sense, it's best to file together. There are a few instances such as that. One of the other, and some people don't realize that, but one of the other things of filing separately may be just to keep peace in the household. Sometimes it's a trust factor. I've seen it, believe it or not. You say, okay, we're married, so we don't have any issues with that, but some people don't want the other spouse involved in their finances, so they just file separately so they don't have to go through all of that with each other. So hopefully none of you guys in that situation. I think if you love someone enough to marry them, I think that shouldn't be a hurdle as far as finances is concerned. $1095-C, that is a form that a company has to send out. Started a few years ago with Obamacare and insurance, whereas all employers have to provide insurance to the employees. So what that is just first of all, no, you don't have to file it with your taxes. And all that is telling, the company is telling you these are the insurance benefits that they offer that you are entitled to. You don't have to take, but you are entitled to. No, you don't need it for taxes, more of an informational form. Now, the other 1095 is a 1095B and 1095A. 1095B, you do not have to file as well. It is more of an informational tool, and that is basically the company is telling you the benefits, the insurance that you do have with the employer, and also if you're having a dependents or taking advantage of that as well. So if you have insurance at work, they'll tell you, okay, you're insured for the whole 12 months of the year, and your spouse is on the insurance, and you have daughter 1, son 2 also is covered. And that's, don't need it, but that's just to tell you what coverage you have and who's all, as far as dependents, also have that coverage. Now there's a 1095A, which comes from the IRS. That you do need to have when you file your taxes, because that is telling the IRS that you've purchased insurance through the marketplace. And what that means, if you went in the private industry, you called around, you don't have it through employer, but you have insurance through different business channels, because when the whole laws were changed, Obamacare and everything, everybody had to have insurance. So that is a way of letting them know you do have insurance. It's just not with the employer. The 1095A is the one that you would need when you file your taxes.
Hey y'all, Mr. Kent Hill forgot to answer one question in his video, so I will be reading his answer. No need to save money receipts, since very few things are deductible unless you own a business or are able to itemize. One of a few deductions on a federal level is cash contributions to charitable organizations. Some states, like South Carolina, allow you to deduct some vehicle expenses on a state level.
Yes, they are. Things like a haircut is considered a deductible expense if it is a part of your makeup. For example, if you are an actor, you have to get a haircut for the show, for the play. You have to buy certain clothes, anything that for your personal appearance, to get on that stage, you have to purchase for that appearance. It is a deductible expense. And those are very unique based on which one, again, if you're a musician, of course, instruments. You know, if you have to buy an instrument, take an instrument to be tuned, all of that is deductible as well. The things you have to keep in mind is if you had those losses strictly because of COVID, there are certain increased deductions that you might be able to take. And they are various in nature. Won't be able to go through all those, but the biggest thing you would need to do is Google the CARES Act, how you need to get involved, who you need to call, because there's a lot of money out there for businesses who lost money during COVID. There's money out there for businesses to pay employees who are out for COVID, who was out for contact tracing, to keep the unemployed safe. So there's a lot of money out there, but you really have to work to find all the different channels you need to call. Also, your state agency. You need to call your state agency because there's a lot of state money out there that might not be out there on the federal level as well. So there's a lot of money out there. You have to be diligent. You have to do your research. You have to call people and make sure you can get involved with as much of that stuff as possible. Yes, you need to fill out a Schedule C for each business. For Schedule C for a freelancer, also a Schedule C for your other business. If you don't have W-2 income, things of that nature. Why they need to be separate is because one business, you could have different deductions than the other business. For example, as we mentioned earlier, as a musician and actor, they might be able to deduct a haircut or some clothes they bought because of the appearances they make. Whereas if you're in another business, like myself, I'm in a tax business, no, I can't deduct cost of haircuts. I can't deduct clothes that I buy because that's not required in the line of business that I'm in. So if the two businesses or two separate businesses, different lines of work, yes, file separate Schedule Cs because you're going to have certain deductions in one that you are not able to take in the other. Yes, definitely want to max out your retirement. That's the biggest way you can get away from taxes that way. Now, as far as buying property, as far as investing, that is a way to not necessarily skirt around taxes, but if you have the income, that is definitely a way you can start a business. If you're single, making real good money, if you have a little loss in that business, you can deduct those losses, which would go against your income. But also, if you have good income, no kids, that's the time you would like to maybe buy property or start a business because you have something to fall back on before you have, get married, have kids. Money's a little more tight. Yes, this is definitely time to do it when you're young, single, and can get out and make those decisions, and you don't have a kid or spouse depending on that income. So definitely, I wouldn't say you get out and do it just for tax purposes, but from a financial planning perspective, that's the best time to do it before, as they say, life really starts and you do have a family and more obligations. But as far as sheltering some of the money for taxes, yes, maxing out retirement is one of the best way to do it. And also just kind of do some tax planning. Maybe you have to have a little bit more taxes taken out if you have a real high income, so you don't have to pay taxes at the end of the year. So you have to do a little bit of tax planning. Sometimes it's a little bit more than just filling out the W-4s for single and one or single and zero. Sometimes you have to do a little bit more tax planning in those cases. You can have as many stocks as you want, and it can go up in value. You can have a stock that doubles, so you've made a lot of money on it. You do not have to pay taxes on that money regardless of how much it goes up until you sell it. Once you sell it, then you have to pay taxes on it. If you have that stock for less than a year, less than 12 months, you have to pay short gain tax, capital gains tax. If you have it for a year or more, you have to pay long term. Now, the key is short-term capital gain taxes is going to be a little bit more expensive than long-term. Short-term, it could vary based on income, whereas if it's long-term, it's going to be a 15%, anywhere from 0 to 15 or 20% based on your income level. So if possible, if you can hold it for a year or more, you're going to have less tax implications than if you hold it for less than a year. Now, as far as gifting it, you can gift a stock. And some people do it, and it's a way to get around paying capital gains tax. For example, if I have stock and it is increased in value a lot, I got to pay taxes, either long-term or short-term taxes, capital gain taxes on that gain. If you gift it to someone, you can give that tax to a child or to a cousin or to a family member. You do not have to pay capital gains tax because you didn't sell it. If you give those stock to someone, it's still not taxable if it's less than $15,000 until whoever the beneficiary of those stocks sell it. At that point, then they would have to pay capital gains tax on it, being short term or long term. If they're in a lower tax bracket, making $40,000 less, basically there won't be any taxes on it. Over $40,000, then taxes will be scaled up based on it. It's capped from $40,000 to $441,000, and it goes up if your income is higher than $441,000. So you can gift it to get away from some capital gain taxes. The taxes will be have to be taken care of on the other end whenever those stocks are sold.
Hello, beautiful people. So in regards to dividends, everything that Mr. Hill was talking about is in regards to stocks. And if you're selling those stocks, because again, if you do not sell them, you do not have to pay taxes on that stock. However, dividends. I didn't sell anything, but I'm making money. That's great. But you might have to pay taxes on those dividends in regards to, depending on like your yearly income. Now, what I found, and I include this link below, it's from ABC News from a few years ago. I thought it was a really great article to help you if anyone's having some trouble with dividends or wanting to get around taxes or decrease their taxes for dividends. This article provides you with different things that you can do to do that. And also it lets you know things that you need to look out for in regards to trying to work around paying less taxes on dividends. All right, now for some general tax advice from Mr. Kent Hill. And you do not want to miss this because a lot of y'all need to hear what he got to say, okay?
In a general sense, one thing I always tell people, please file. So many people say, well, man, I got to pay this year, I'm not filing. It's only going to pile up. Go ahead and bite the bullets, do what you need to do, make payment plans, but stay current on your taxes. Sometimes you get in a cycle, all of a sudden 2 years have passed, I haven't filed, you got interest building up, penalties building up, and it's gonna cost you a lot more down the road. Then go ahead and bite the bullet right then. That's all I have. You can reach me or talk to Jalissa if you have any other questions or you need tax help. Jalissa, appreciate the time, and maybe we can do this again sometime. Thank you and appreciate it.
Hello, beautiful people. That's it. That is all of our tax questions that we had. I really hope this was useful for you. I really hope that you all enjoyed seeing Mr. Hill explain any of this information. If you have any tax information or tax questions that you would like, or anything that you would like to say, please feel free to contact me and I can put you in touch with Mr. Hill. All right, have a wonderful day, beautiful people. Like, comment, subscribe, share this with your friends if y'all got questions about tax stuff. Jalissa Joy out.